This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse, wrapping up the week. This is your Forex Report for Friday, April 27, 2007. Another string of weak economic data helped to fuel a further decline in the dollar this week, forcing the currency to a new all-time low against the euro. The bad news began on Tuesday when April consumer confidence hit a new 8-month low, and existing home sales plunged nearly 9% in March. This reversed the dollar's strength seen in the first 24 hours of trading and opened the door for another move lower. Durable goods orders for March did print better than expected on Wednesday morning, but only on the back of weak numbers in January and February. New home sales were released later that morning, but failed to match estimates. The Fed's Beige Book came out Wednesday afternoon, stating that most regions had experienced modest to moderate growth in recent months. It turns out that even the assessment of modest growth may have been a bit too optimistic, as today's advanced reading of GDP showed growth at a mere 1.3% for the first quarter. Of course, with the dollar already having lost so much ground this week and in prior weeks, bears were unable to capitalize on the latest shortcomings in the U.S. economy. In other news this week, the Reserve Bank of New Zealand surprised the markets with an increase in interest rates to 7.75%. Ironically, the Kiwi has been unable to gain since the release. The Bank of Canada and the Bank of Japan also met this week, but both held rates steady as expected by traders. While the CAD has seen almost nothing but gains all week, the yen remained under heavy pressure on more disappointing news. A string of reports last night, including CPI, industrial production, and retail sales from Japan, came in well below estimates. Generally speaking, most data out of the Eurozone, UK, and Switzerland continues to show signs of strength, even with the U.S. growth slowing further. UK home prices and GDP both surprised to the upside this week, while German confidence indicators such as the IFO beat expectations as well. In the big picture, the pound and euro continue to outperform in the broad market as both central banks are giving indications that further interest rate hikes are on the horizon. The pound, having reached the highest against the dollar in more than 25 years, has retreated but still remains around the $2 level, and the euro reached a new record high this week. The pound did slip on concerns that the currency rose too high too fast against the dollar, but economic reports coming from the UK continue to support the currency, especially housing and inflation. On the other side of the coin, there is still speculation that the Fed will need to cut rates, probably during the latter half of this year, and economic releases from the U.S. continue to support this notion. Federal Reserve Bank of San Francisco President Janet Yellen spoke this past week in New York and said, while it is still appropriate for Fed policymakers to tilt toward higher interest rates, the central bank needs considerable flexibility because of the greater risk to the economy. Even though Yellen is now a non-voting member of the FOMC this year, her comments were in step with the Fed's statement on March 21st. Fed policymakers deleted language hinting at a rate hike because of increased uncertainty over the economic outlook. The Fed meets next on May 9th, followed by the ECB and BOE on May 10th. We believe that while the dollar may hold its own ahead of this meeting, further changes in language could trigger the next big move down. Till next week, have a wonderful weekend. Take care.